Ever wondered what all the fuss is about the stock market? You hear it on the news, maybe a friend talks about stocks, and it often feels complicated. But understanding the basics isn't as daunting as it seems. And honestly, for most Americans, understanding the stock market is crucial for building long-term financial security. So what is the stock market? Simply put, it's a place, though increasingly a virtual place, where buyers and sellers come together to trade shares of ownership in public companies. These shares are commonly called stocks or equities. Think of it like a farmer's market, but instead of tomatoes and corn, you're trading pieces of companies like Apple, Google, or Coca-Cola. Why is this relevant to you? Well, owning stock means you own a tiny slice of that company. As the company grows and becomes more profitable, the value of your shares can increase. Historically, the stock market has provided significantly higher returns than traditional savings accounts or bonds over the long term. This makes it a key tool for building wealth, funding retirement, or achieving other financial goals. Let's break down how it actually works. Imagine a company, let's call it FreshBrew Coffee, wants to expand. They need money to open new stores, buy better coffee beans, and hire more staff. One way to raise that money is to go public and sell shares of ownership through an initial public offering, or IPO. When FreshBrew Coffee does an IPO, it's essentially dividing itself into millions of tiny pieces. Those are the shares of stock. Investors, everyday people like you and me, as well as institutions like pension funds, can then buy these shares. The money FreshBrew Coffee receives from the sale of these shares goes directly into the company to fund its growth. Once the shares are available, they're traded on exchanges like the New York Stock Exchange, NYSE, or the NASDAQ. These exchanges act as marketplaces, connecting buyers and sellers. You don't actually go to the NYSE anymore. Most trades are handled electronically by brokers. Let's say you decide you like FreshBrew Coffee and believe it has a bright future. You use a brokerage account. Think of it like a bank account specifically for investing, to buy 100 shares at $20 per share, costing you $2,000. Now here's where it gets interesting. If FreshBrew Coffee does well, sales increase, profits rise, more people will want to buy its stock. This increased demand drives up the price. Let's say the price rises to $25 per share. Your 100 shares are now worth $2,500. You've made a $500 profit. Of course, the opposite can also happen. If FreshBrew Coffee struggles, its stock price will likely fall. If the price drops to $15 per share, your 100 shares are now worth only $1,500, resulting in a $500 loss. This fluctuation in price is what makes the stock market both exciting and risky. It's driven by a complex interplay of factors including company performance, economic conditions, investor sentiment, and even global events. There are different ways to make money in the stock market. You can buy low and sell high. This is called capital appreciation. You can also receive dividends, which are payments companies make to shareholders out of their profits. Not all companies pay dividends, but it's a nice bonus when they do. Now, it's important to understand that investing in the stock market isn't a get-rich-quick scheme. The market can be volatile, meaning prices can swing up and down dramatically in the short term. That's why it's generally recommended to invest for the long term, several years or even decades, to ride out those fluctuations and benefit from the overall growth of the economy. Diversification is also key. Don't put all your eggs in one basket. Instead, spread your investments across different companies, industries, and even asset classes like stocks, bonds, and real estate. This helps reduce your overall risk. A simple way to achieve diversification is through index funds or exchange-traded funds, or ETFs. These funds hold a basket of stocks that track a specific market index, like the S&P 500. So let's recap. The stock market is a place where you can buy and sell shares of ownership in public companies. It's a powerful tool for building wealth over the long term, but it comes with risk. Understanding how it works, diversifying your investments, and investing for the long term are essential for success. Remember that company performance, economic conditions, and investor sentiment all play a role in stock prices. Whether you're saving for retirement, a down payment on a house, or just building a brighter financial future, the stock market can be a valuable ally. Start small, do your research, and remember the importance of long-term thinking. Remember, this information is for educational purposes only and should not be taken as financial advice. Always consult with a qualified financial professional before making investment decisions.